the planning department brought to council in the January council meeting for referral to the finance advisory committee. And this is our so I'm trying to make this go full screen. Are you seeing it as full screen, or are you seeing
full
it?
screen?
It's full screen.
Okay.
It looks good.
Okay. Wonderful.
I'm okay.
All right. Let's see where I'm going. Oh, there. Okay. So this was our annual review of the planning and building fees. And just by way of refresher, when we did this, our last annual review last year, when we came to the Finance Advisory Committee in February, the FAC recommendation for council was essentially wanting to see a more fulsome review of our fees and charges in the planning department, and drawing council's attention to and staff to policy 8.0 and 8.1 guiding principles for planning and budgeting decision to review municipal fees to ensure that the principles are being followed, including full cost accounting. So those policies, 8.0 is that the fees and charges are reviewed annually, and 8.1 being that fees and charges for development-related functions, building and other related inspection, development approval, subdivision will be set at levels to recover full costs. So back in 2023 in the spring, then we proceeded with the amendments for some of the minor charges that we brought forward, but then in the fall and winter 2023, we took a sort of bigger look at what were the costs associated with building permit functions and what were the revenues. So we estimated costs for 2023 by looking at salary and benefits within the planning department. So some staff were allocated 100% to that building permit program, so the building inspector and the planning clerk. And then others, like myself, were allocated a percentage based on a sort of estimate of how much time was spent doing that. Other expenses in the planning department budget, and then essentially an allocated share of the municipal hall expenses, and then costs from like the bylaw department and the finance department in terms of administration and enforcement. And so our estimate that we came up with was this $319,000 estimate of all costs associated with the building permit program. And then looked at the revenue over the last 5 years, and bringing that 5-year average. And that's just a thin graph there. So what we do see is quite like the building permits fluctuate depending on building activity. And interestingly, often the revenues don't necessarily line up with when the most activity takes place. So if people, process and receive their building permit in December, that's when they pay the full cost. And then it's possible that the inspections take place over the next year. Or similarly, somebody may apply for a permit in November and staff spend quite a lot of time processing and reviewing that application. It's issued in January, and so the revenue shows up in the following year. So they don't always line up, but we do see this change in revenue taking place based on construction activity. And so in a couple of the years, the revenue from building permits exceeded that estimated cost, and in other years it was below. So currently our building permit fees, the base fee amount is based on the construction value of the house, and we charge $9 per thousand up to the first $150,000 in a construction value, and then $10 per fee above that. And what we proposed in the report to council was to increase that so that instead, essentially increase them $1 per thousand, so to $10 per thousand for the first 150,000, and then 11 beyond that. And that's essentially about a 10% increase in the building permit application. And then we had another that I've just added in talking with our building department this last week, so since this report went to council, and that's to increase our building permit application fee for larger projects. So that currently we have a flat fee of $150 that's charged for a building permit application. And we're still struggling with if we get sort of larger applications where quite significant staff time is involved, but then sometimes due to the applicants gets their cost estimate for construction costs and they actually walk away and they never pay for their permit, they never pick it up, and they've paid the application fee, but they haven't paid the actual building permit fee itself. So there's desire from our building department, our building inspector and planning clerk to have an application fee that would increase based on construction of construction value. And then that fee is then, is a portion of your ending building permit fee. So the overall fee wouldn't increase, but you'd pay more as the application fee. And then if you proceed with your building permit, you would then pay, a smaller percent of the remainder if the application fee is increased. And then we had 3 other sort of just minor amendments proposed. So one was that we charge a security deposit on building permits of 1% of the construction value. And what our planning clerk has found is that on small building permits, essentially the cost of administering the security deposit is more, like, takes more time than it's actually worth. So we take the deposit to ensure that if damage is done to municipal property, that we can use that deposit to restore it. We use it if a construction project is abandoned partway through, we can use the deposit to restore the site to a safe manner. And we use it partly as just a carrot for people to actually complete their permits and close their permit and finalize it. And we tell them, if you finish, you get your deposit back. Please, finish your project. But on small scale projects, it's not, doesn't really do any of that. So we'll be emailing people being like, you really need to close your permit, and then you'll get $17 back as your deposit. But we found sort of the time taking to process that deposit is more than the deposit is. And so we'd like to not have it on smaller building permits. And then just a couple of other applications. So lot line adjustment applications are our subdivision application where you're adjusting the line between 2 properties. And it's always had a lesser fee than subdivision applications where you're creating a new lot. And to some extent that makes sense. They are less work, but what we found is they're not that much less work than the fee is. So a subdivision for a new lot is $1,300, and a lot line adjustment has been $400. And we're like, it's not a quarter of the work. It's more like half the work. And then finally, we have fees for if you want to change your building number. So if you don't like your number and you'd like a different number, we have a fee. I'm going to apply for it. And the fee was established in 2000 and never makes a whole lot of sense in that it's $200 to change 1 digit of your number and then $40 if you ask for changing more digits. And we just want to have a flat fee of $250 if you want to have a new address. Yeah, so those are the recommended changes. The most significant one being that change to the construction value for permits. And I'll stop sharing here for open for discussion. Stop sharing.
Questions? Allison?
Is there a fee for getting a lot house number in the first place?
No, there's no fee. If there's no civic address, then we assign a civic address. This is if you want to change it. So we've had a couple where people say, I would rather be this. No, I would rather be a different number. And I'll say too, and there's no charge if it's if our emergency responders trigger a change because it's confusing. If we say this is not safe, these 2 numbers are the same, or somehow it's confusing and we want to change it to make it better access for emergency responders, there's no charge. The charge is just if people actually request because they would just prefer a different number.
Okay, thank you.
Any other, John?
No. So this is just for building permit fees, not development permit fees, correct?
Correct. Yeah.
Is there anything? Because they're a lot of work.
Sorry, John, you broke up through your question.
Are you reviewing the amount for development permit fees as well? Because the development permits are becoming more and more work as the people's expectations become more complicated.
Yeah, we doubled them probably in 2020 or 2019. They used to be 175 and they were doubled to 350.
Is that for just a DP,
yeah,
work within a riparian area and that sort of stuff?
Yeah,
that doesn't seem like enough.
No.
So I think for this fall, our focus was on the building permit side, and then maybe the next go around we would look at that development permit stuff again.
And DVPs?
Yeah, we would do development applications, so DPs, DVPs, rezoning.
Yeah.
That suite.
Okay.
So I noticed there were comparisons with other municipalities, and trying to keep Bowen, I guess, in line. But of course, one of the things Bowen is saddled with is a 20 to 30% premium for trying to build on Bowen versus, say, Squamish. So since the fees are based on the construction value, people are already paying quite a bit more. But that said, I guess the mandate is just to try and affect recovery.
Mm-hmm.
And, you know, we have to be careful in Bowen because a lot of our costs are a lot more, and hopefully someday we will have maybe some people that might want to build some sort of affordable housing. And I guess the other thing some councils have done, I don't know if many have done it, is they might have a break written into their bylaw that if someone is building an affordable housing project and it's got a covenant or something to ensure it remains affordable, that there are basically a subsidy or a reduced rate to help with that.
Mm-hmm.
I don't know whether council wants to consider thinking of that, but you know, the problem of providing affordable housing is becoming more and more acute on Bowen, and at some point, something may actually start to happen.
Mm-hmm.
Thank you.
Okay. Any other questions or comments?
I see Judy has her hand.
Sorry, Judy.
Judy, you're on mute.
To follow up on John's question, when I did a quick comparison of the other communities that you'd included in the report, it appeared that other than Squamish, that Bowen was one of the least expensive. Would that be a fair assessment? Other than
Yes,
John's comment
yes.
about the
Yeah.
And if
Like
we
they're
were
all slightly different and many have
Yeah.
like many more categories, but yes, our takeaway
Yeah.
was we were less expensive.
Okay. And if we were to include something that was a some sort of a I don't know, subsidy for low cost housing or below market housing, where would that fit into any of this, do you think?
We have an affordable housing reserve fund that has some money in it. And then I think often that I've advocated to council, and Kristen can correct me, but that rather than like waiving fees, is that we would be granting a fee of the equivalent amount to cover the building permit fees. So conceivably, an affordable housing project would come for a grant, and we would say, or come for like, you know, relief on their building permit fees.
Okay.
And I would think the appropriate way to do that with council to grant them an amount that's equivalent to their, you know, municipal fees, and that the funding source would be the affordable housing reserve.
Okay, so we don't have to build it into this report necessarily. We can do a case by case kind of exception.
Yeah, because even like when I show the building permit revenue, like we have had projects that have had fees waived by council, and then it makes this portion of it challenging. So for example, like the community center, council didn't charge building permit fees for, so it doesn't show up in my building permit revenue as like revenue to the department, even though the work of issuing the permit still took place.
Mm-hmm.
Okay, and in the report, page 3 of 7, 3.1.3, the cost recovery analysis, it's I'm assuming it's a typo, but the 41,000 is higher than the revenue. The cost is higher than the revenue. Instead of you've got the used word 21,000 lower.
Sorry, Judy, say again where you were looking.
3.1.3 cost recovery analysis.
Yeah.
Okay, the first line, 41,000 is lower than the revenue generated.
Yes, you're right. I think I'm just backwards.
Okay, so then, and how you're calculating that is an average of the last 5 years of income, and costs are based on the budget or actual costs? After
So in
we
terms of costs, I think I'd taken actual costs, except for the like salary and benefits of the planning department. It was based on the budget because we did it partway through 2023. So
Right.
we had taken budgeted salary and budgeted benefits.
So we're trying to break even on this as opposed to making a whole lot of money, right?
Yes.
Okay, so then, is that the principle where we're taking an average of the last 5 years of costs, or what are we doing? Revenue, an average of 5 years of revenue, and then trying to get as close to the actual cost as possible.
Yeah, I think so. And to some extent, it was easier doing it because when I did the 5-year average, it was almost exactly last year's revenue. Like they were basically the same number.
Yeah.
So it's hand because I was challenged too because I'm like, well, I'm not looking at 5 years of costs average. I'm looking at just last year's costs, knowing that like salaries have increased with COLA and whatever else.
Okay. So
Um,
that's part of our annual review, just
yeah.
making sure it's real. Okay.
Okay, thank you. Allison and John.
Just a
Allison?
little clarification, under the Local Government Act or the Community Charter, I'm not sure which, we can't make a profit on recovering our costs. I don't think building fees and permits can be a profit center. We have to just recover costs. And costs, of course, are going to vary because, as Daniel said, you incur the costs maybe, over a 2 or 3 year period with a construction project.
Okay, thank you. John?
I guess to point out, by waiving the fees on the community center, that's quite a major component. Did you sort of try and balance the other numbers to take into effect that you didn't collect what might have been, I
Yeah.
don't know, $150,000-$250,000?
I mean, I didn't like that was my example. That was before, like, I think we issued it under the 2018 code. So I think we issued it previous, so it's not included in this, but that was sort of just an example.
Because then certainly all the fallout work, etc., it has been under the latest cost. And then, sorry, just a clarification, my comment about dealing with low-cost housing, I do recall that if you're getting grants from senior levels of government, they like to see some sort of support from the current government. So going with your policy of granting a credit or something on a per project basis helps with the person's application because it gives them more points with the senior level of government.
Yeah, exactly. It's to show that like it's not free. It's not like, oh, it just has no value, but it has this amount of value that we're contributing to your project.
Yeah. Thank you. I have one common point. If in fact you're doing things such as the community center, do you establish or identify an equivalent value as it relates to that particular work? I mean, it would be probably relevant in terms of looking at it in terms of if you're choosing not to charge for certain types of projects, whether in fact you identify what the value of that is as it relates to contribution from the department.
I mean, I think I'll say under Kristen as CFO, we have been doing that. So we've been internally charging. Like if we have a small, like we haven't done anything as obviously as big as a community center since then.
Sure.
But for the small permits that we have been internally accounting for it. So we have been doing that going forward. Yeah.
Okay. And I noticed from your other report that we got this morning that the additional increases you're proposing should generate about $33,000 a year, I believe, was the number that you came up with.
Yeah.
In terms of that would break even. My only comment about using a 5-year average is I would tend to be more focused current and future periods.
Yeah.
Than rely on in history, because obviously those are historical costs and everything else. And I guess going forward, it would be really maybe something to consider in terms of an approach that addresses proposed budget and future year requirements. So
Sure.
Just a comment generally.
Yeah, no, and that's good. And I know, yeah, something I challenged with it even when I did it is because like our 2022 revenue was so much higher than it's ever been. And when I started doing this, I was just looking at 2022 and I was like, this isn't realistic. I can't use that number. I couldn't bring you just 2022 revenue and be like, oh, look, we're making tons of money. Because we knew that was sort of a blip and that wasn't sustainable.
Okay, fair enough. Is there any other comments or questions for the committee? There is a proposed recommendation I can read it and I'll ask somebody to.
Well, I've just done something a little different since I'm not feeling like you're gonna have a lot of changes for Daniel. Can I put on screen?
Go ahead.
Can you see it?
Yep. Okay. The recommendation coming forward is that the committee recommend that council approve the development and building fee review report as presented at the April 30th FAC meeting. And if I could have a mover and seconder, please.
So moved.
Thank you. Seconder? John?
Seconded.
Thank you. Any other additional questions or comments before I call the question? Seeing none, all in favor?
Aye.
All right.
Okay, thank you. That motion is carried. Okay, we'll move on to new business.
Okay, thank you.
Thank you.
Thanks, Daniel.
Appreciate it, Daniel. Okay. Okay, 5.1 is the draft 2023 audited financial statements. Have we received those? I don't think I saw anything.
They were sent out on Friday so that you had them for the weekend.
Oh, I'm sorry, those. Okay, I got it now. Yeah. Thank you. Okay, so I'll refer this to Kristen, please, for your reporting.
Okay, thank you. I'm pleased to report that we are in the final stages of wrapping up our 2023 year-end audit. The audit team is here with us at the meeting today, and we'll be speaking with you enclosed as well. For this year, I'm pleased to report that we are ending the year in a surplus position. Our surplus was 14,837,333. That doesn't mean that we walked away with that much money in the bank. We ended up being able to contribute of that money, about 4 million of that into reserves. And the balance of that was what we used to invest into our capital assets. So those were spent on construction of the community center, acquiring equipment, resources, anything else of a capital nature. Some of the variances in our revenues came from, some things were money that we didn't receive that we had anticipated, and other things were unexpected receipts from contributions or unexpected grant revenues. Some of the significant ones that I will make note of course, are the contribution that we received from finalizing the Grafton Lakes. There's a $5 million contributed tangible capital asset there. So that, of course, is adding to that $14 million surplus. It's not a real cash item. It's the fact that we received land in kind as a result of approval of that Grafton Lakes rezoning. Our investment income was much higher than anticipated. The interest rates stayed high all year, and most of our cash was sitting there earning 5% for the bulk of the year. So overall, our investment revenue was about $700,000 higher than we'd anticipated. There's two sides to that story, of course. One was that the community center was, the project is taking a lot longer than we had thought. We thought that we would have spent that money by now, but it is still sitting in our bank account waiting as the project construction continues. So the upside of that, of course, is that we had that opportunity to earn additional investment income. On the downside, we had budgeted $2.9 million in other revenue. A big portion of that was a $2 million hoped for donation to contribute towards the community center, which did not materialize, unfortunately. We do have a grant that we received in 2023 from the provincial government, the Growing Communities Grant, which is we will be budgeted to be used this year and spent to fill that that community center fundraising gap that didn't materialize. Some of the variances on the spending side, there was some savings in the recreation and library line item, about just over just under $200,000 unspent there. Again, most of that was savings from the community center not opening in 2023 as we had budgeted for. So they will, of course, be spent in 2024 later on this year. So it's really a timing thing. Those expenditures will come, but they'll hit the books this year. And another savings you'll see in the development and planning line item. There's just over $150,000 of savings there. Development and planning is where we do budget for council's strategic planning expenses. And the big thing in there that we had anticipated would begin this year in 2023, last year in 2023, was the OCP review. And that again was not started, and we will be starting that this year. So from our operating budget surplus of that 14.8 million in surplus, the figure that we're really keen to look at is what is our actual operating budget surplus, and that is approximately $580,000 this year. So the unexpected investment revenue plus the savings from not opening the community center, not hiring that staff until very late in the year, the facility manager position, those combined together to give us that operating surplus of 580,000 this year. Our reserve fund balances for the general fund at the end of December are sitting at just under $5.7 million. We opened the year at $2.7 million. So a big portion of that, of course, was the 2.2 million of growing communities funds, which we just banked, and it's just sitting there, and we will spend in 2024. I don't have any other comments, but I'm happy to answer questions or.
Okay, entertain any questions from the committee members?
I've got a couple.
Please.
Okay. Did you cover off the COVID Safe Start grant?
Yes, we did use the remaining COVID funding and used it to fund community center construction. That's all gone now.
Okay. And then the 2.3 will also be all gone to community center.
In 2024. Not all of it, about 2 million of it.
Okay. All right. Damn it, I didn't mark the pages.
I did receive some
Well,
editing, some
yeah, those are little
that.
typos. Yeah.
So I do have those notations from you, Councillor Morse.
So the pension plan doc one, is that just is it actually 2022?
It is. Yeah.
When the note, so we don't know how many employees there were in the municipal pension plan in 2023 then.
No, they update it coinciding with the review that they do every 3 years.
Okay, all right. And I think you answered most of my questions.
Okay. Thank you. Any other
Uh-huh.
questions from John?
Thank you, Fred. Looking at the financial statements on page 32 and 33, there's the statement of operations by segment for 2023, and then there's 2022. And I guess I focus on the water systems because I'm on the Bowen Bay Water Board, and they seem odd in that the 2023 costs are much lower than the and revenue is much lower than the 2022 costs and revenue. I don't quite understand why.
Well, specifically, if I'm looking at 2022, looking at the revenue, there's maybe $500,000 difference in revenue, and that is attributable to a contribution from the Grafton Lakes developer for the water treatment plant that was received in 2022. So that's a one-time thing that we will never get again. The expenditure side of things, again, a big thing relates to the amortization expense. And again, in 2022, there was a big reconciliation done of the capital assets. Catch up, we did some We had some new estimations for estimated useful life of some of the water assets, and we determined that our anticipated estimated useful life for some of the infrastructure was probably too long, too high. So we did a write down of some of the asset values in 2022. So you can see the amortization expense in water systems in 2022 is 782,000. And in 2023, it's 403,000. So 2022 includes a one-time adjustment in order to write down those values to something more realistic, more consistent with what we believe the remaining useful life was for those assets. So going forward, we can expect that amortization to be around 400,000. It'll change, of course, once we start taking on and replacing the water systems in Eagle Cliff and in Blue Water Park, because we'll have some brand new capital assets there, which will just the value of the dollars, it's going to significantly change the amortization expense going forward once those assets are in place. But that's the difference between the 2022 and 2023 values.
Okay, thank you.
You, Allison?
I got my fingers stuck in all these pages here. So going to looking at the tangible capital asset schedule that you were just on, the assets under construction, is that all the community center or is that also part of Cove Bay?
Yeah, Cove Bay is still sitting in work in process because the water treatment plant is not functioning yet. So we have not put that into capital assets and started taking depreciation on that yet.
So it's still, so the assets under construction of 18 million, 2 or 3 of that belongs to Cove Bay.
No, 9 million of that belongs to Cove Bay.
Oh, okay. So we got 9 for Cove Bay and 9 for the community center then, roughly.
Yeah.
Okay, so and then I was wondering under the assistance granted to community organizations, if we shouldn't put the word the hearth in brackets behind Bowen Island Arts Council, since they like to refer to themselves as the hearth. I don't think they've legally changed their name, but I think
Yeah, we could do that.
just to put that in brackets might be good.
Okay.
And what did we sell?
We sold 2 trucks. So we sold a 5-ton and one of the 1-tons.
And we made a $90,000 gain on one of those?
Yeah, we had
selling
them
them?
on the books at 28,000. So that was good news.
Oh, that was their depreciated value. Okay.
Yeah.
That's all right. And then looking at the water fund capital on the deferred revenue, is that Eagle Cliff system?
Yeah, that's all 40 something left in there. Yeah.
Yeah, it's no, we've used up all the Cove Bay part. Okay.
Yeah. Yeah. So we'll use that this year in their project.
Yeah. Okay. Thank you.
Okay, thank you. Any other questions? Okay, Kristen, thank you for your reporting. There is a recommendation that the committee recommend that council approve the audited 2023 financial statements as presented at its April 30th, 2024 meeting. Can I have a mover and a seconder, please? Judy, seconder. John, thank you. Any further questions or comments?
Yeah, one more.
Go ahead.
Do we need the schedule for the Growing Communities grant as a separate attachment, because we've already got it in the reserve schedule?
Yeah, it's a requirement.
So we've got to have it separately and included in the reserve schedule. Okay.
Okay.
All right.
Thank you. Anything else? Okay, I'll call a question. All in favor? Thank you. That motion is passed. Thank you. Within the agenda, it identifies to move to a closed meeting. I'm wondering if we should dispense with the other points before we do that, just in case.
Well, we're keeping the auditors around if we.
That's what I mean. We're going. Yeah. Well, I don't think the next ones are going to take more than 30 seconds. It's just that they're identified as points under the agenda.
Okay.
The inclusion of information items that were provided.
So I just took some excerpts from council meeting minutes that I thought would be of interest to the committee from January till April. And
Yep.
that's regarding budget and land opportunity reserve.
Yeah, appreciate that.
Okay.
And also, any questions or is there anything proposed from the public?
Nothing from public.
Okay, seeing none, I think we can now then move forward to 5.2, which is to move to a closed meeting. I guess I kind of have to read this out, so I'll read it out. That the committee move to a closed meeting pursuant to sections 91 of the community charter, 91A, a part of a council meeting may be closed to the public if the subject matter being considered relates to the following: A, personal information about identifiable individual or holds is considered for a position as officer, employee, or agent of the municipality or another position appointed by the municipality, and or the next point is discussions with municipal officers and employees respecting municipal objectives, measures, and progress reports for the purposes of preparing the annual report under section 98, annual municipal report. So, is that a question, or are you moving it, Judy? Moving it, thank you. Seconder?